What's up everyone, doing a market breakdown here, currently looking at the S&P 500. Today's going to be a bit of a different video, so I'm going to be discussing the likes of stocks within indices like the S&P. So for example, Apple, just the first one that popped into my head, and basically show how they can almost interlink with one another and correspond with one another as well. So just going to show a breakdown here. So at the bottom of this range we have our low here at 35.81, and then you can see here, so we're currently trading at the minute. S&P on a monthly time frame is just tapped into monthly order block, clear rejection off of that level there. What else we got in here? We've got another order block here. If I can get my cursor to go into it like that. So another order block here inside of this area. This primarily, these two down close candles, that's like the parent order block as this inside of it. But just given the density of this whole candle, that's the one I'm going to use for focus. Obviously we had buy side rest and above here. As you can see, this price is traded up into these levels here, taking them out. I'll break this down now into a weekly. Just show the year so far. Here's our start of our year, so actually I'll show it into quarters just to kind of give everyone a better outlook of how the year is looking so far. So as you can see, 3 down close candles here, that's one big order block there, coherent to the monthly time frame. That is all just one order block. Breaking it down into the weekly time frame, as you can see, 3 down close candles, it's still that one big order block here. So essentially you can take a measure of that range here with our fib. Here's our, actually I'm going to use a trend line. As you can see here, 50% of that order block tapped into nicely, rejected away quite smoothly. Price looking like it wants to reach back above these highs here. Let me fix that there. Yeah, no thanks ads. I did want to see it kind of get into this here, didn't really get there, but as you can see it did trade around it here. So that's our volume imbalance right there. Also here we have our asset imbalance, so side inefficiency in the form of fair value gap right there, and that's on the daily time frame. Oh, alright, I'm after messing up. Price came into fair value here. And is now traded back up into this range here. So we had internal range and now going for the external range liquidity here. Possibly wanting to break up above these levels here and obviously go to make new highs. To be honest, not really seeing the whole gist of why the stock market's pumping, given the fact of current geopolitical events. Doesn't make sense to me, but the market's going to do what it's going to do. Here, that's another level I'd be looking at. Another volume imbalance right there, as you can see, tapped into it here, also tapped into the high of this, traded, rejected away, coming up into that level there. Ultimately now on a 4 hour, as you can see, old low respected there, came down into then that buy side imbalance as I was saying there, and then obviously rejected off of that, started to expand here, consolidation, came down, tapped into it, boom, straight up into that level here. And this is kind of the main focus point, I suppose, of the video. So in terms of stock selection, this one of ICT's concepts that he does use, and obviously discusses how to kind of find a stock that is essentially going to do well, and you basically find a stock within an indice like the S&P, the Dow, the Nasdaq, and then you can kind of correlate it over here. So let me just overlay it, just kind of easier so you can see it. So say Apple, for example. Yeah, don't like that. We're going to turn that to a line chart here. And look how it's kind of similar. Everything's parabolic with one another. You have the lows here coming up. Why isn't that sitting properly? That's kind of bugging me a little bit. Right, like that, as you can see. See the way it kind of correlates perfectly well. You have the low here, expansion, coming at the end to here. Caps a high here, sells off down into this level and starts to trade away from that here. So I'm just going to show you Apple. It's actually kind of easier to see when you look at it like this. Look at that. It's basically in sync with one another. Perfectly. Symmetry is perfect. So that's what I'm going to show you now. There we have Apple. Here again we have that low there. Buy side here. This is an order block here. Does it get to it there? Yeah, perfect. Why this one, not this one? Two continuous down close candles. It's all one big order block. Because if I correspond that to the higher time frame, which would be the 3 month, as you can see, that's into it there. Lovely. But I'm just going to put it here for the moment. Then we go to the weekly. Why is that like that? Weekly, we have a fair value up in here. Turn it off of that nicely. Officially, market structure shifted there. So when that was broke here on that candle and closed above it, that was the market structure shift confirmation right there. As you can see, traded nicely, taking out that area buy side here. Then you have over here, actually I'm going to put that there. Turtle soup there. See the way goes right under it, kind of bounces off of that, reverses. And look at that, straight up. here. Take a measure of this range to here. Perfect delivery. So one standard deviation, essentially measuring this impulse swing here, where we have our swing low there. Let's get the fib out of the way. And swing high right there. Measure that range. Boom, ran up perfectly to the pip. And then trade straight off of that, returning back into that level here. So basically, I'm actually going to show another. So I'll show you, for example, here. So Microsoft, we'll pick. Same thing. Low here. Buy side here. Price recapitalizing off of that close candle here. To recapitalizing, someone is selling here. Recapitalizing the buys that will be inside of this here. And as you can see, nice trade off of that. This is on a monthly as well, so a very big volume of movement there. Volume imbalance right there, respected. As you can see, just wicking it, expansion. Moves away, taps into that here, straight off of that there. Also, turtle soup. See where it comes in, and then up, like that, nicely. Which is really nice to see. And then obviously consolidating here, meandering around, ultimately going up here. And again, we'll see, so we would be looking at there. Kind of want to base it off of that one. And we actually got a better run up right there. So that's 1.5 standard deviations. As you can see, came up into that level there. Rejected off of that. Starting to trade off. Ultimately, still see stocks going up. With obviously the upwards buys for S&P. Do I believe we're going to be going up for much longer? I don't know. Don't pick bottoms, don't pick tops, but it doesn't make sense to me still. But look, again, as I said, don't try pick it as a high, don't try pick it as a bottom. You're just going to have to find the meat in between the move. Although it doesn't make sense to me economically, the market's going to do what it's going to do. But yeah. So I know I was a bit quiet during this video. My throat's actually kind of at me a little bit, so excuse me if I sound a bit weird. But oh, you kind of got the gist of what I'm trying to see, and not see, what I'm trying to show to everyone here, and how individual stocks can essentially correlate with the indice that they're in, which is Apple, Microsoft. Compare that to the S&P, and they're basically vice versa. They're doing the exact same with one another. No, actually vice versa is the complete wrong term there. They're completely correlated. But yeah, look, if you did enjoy the video, please like and subscribe. And yeah, I'll catch you in the next one.